September 2nd, Friday, about 8:45 California time. Market analysis, Stan Ehrlich. Okay, well, I've mentioned this for the last 3 days. We got oversold on Tuesday, Wednesday, and Thursday, even more so. This is daily data, not a candlestick, obviously. It's just a good old-fashioned vertical bar chart. Open, high, low, close. But my custom relative strength index indicates that on Tuesday we started to get below 25 and stayed below and got even lower yesterday. My recording was made before the rally started. I talked about the market holding at the low that it already had. I believe we made a minor new low slightly after my recording. And then we had a very nice rally. Ended up closing approximately a point higher on the day, closing the opening downside gap, which was another potential exhaustion gap. We have more strength this morning, currently up a significant 4.6, near the high of about 5 points higher on the day. We actually are above Wednesday's high for a moment, very slightly. So we've now gotten up to Wednesday's high and not too far from Tuesday's high, and which isn't that far away from Monday, the beginning of the week's high. Please remember that last Friday, a week ago, we had that gigantic bearish engulfing covering a very large range and making new lows for, I think it was about 20 days. And now we have new lows for well over 20 days, 25 maybe, yesterday. This bounce was forecasted. Not going to go very far if I continue to be fairly accurate. 401 at the moment. I'm only looking for something in the ballpark of 405, 6, 7, which would bring it up to about 6 1/4. Yeah, the high of Tuesday and or the low and close of Monday, and maybe even not quite that high, the high and the opening of Tuesday. So I think we're only 4, 5, 6 points away right now from the rally high, which could be today. It could be Tuesday. Remember, Monday is Labor Day Monday. It's a holiday. There are no markets. So we got a 3-day weekend coming up. And a lot of people that were short, maybe because they listened to my recordings, have taken profits and pushed the market back up somewhat. Otherwise, it's working just fine and dandy. Got no problems whatsoever with the way that the indexes in a general sense are behaving. We did leave, and this is interesting. The daily data doesn't corroborate what the 1-minute data is showing me, and I'm pretty sure the 1-minute data is absolutely dead on correct. The daily data is probably wrong. Got to call TradeStation on this. Probably not their fault, the exchange's fault maybe. This does come up once in a while. On the daily data chart, it says the low of the day is approximately the same as the previous day's close. It looks like it could be exact. Therein may lie the error. On the 1-minute chart, we did leave a 25-cent, give or take a very few ticks, small gap. Now I remember, because on the DIA chart, the gap is still there. The error is only in the spider. We left a small gap behind this morning. Disregard the low of the day on the spider daily data chart. The 1 minute's correct. We left behind a very small 1/4 point gap. That gap is going to get closed. Gaps have been a very important part of the way the market's moved in the last few weeks. Gaps are almost always closed. They're like a black hole in space. They tend to suck the price action back into it sooner or later. Yesterday it was sooner. It gapped down, left a 1.5 gap behind on the way down yesterday morning. In a few hours, the market had rallied all the way back up and closed the gap. This morning we gap up. It comes down right away and closes almost all of it, but not quite. So we do have 25 cents left to close, both on the S&P and the DIA, the Dow Jones. Now the QQQ came down low enough to close the gap on the 1 minute, and it did it twice actually. So there's no gap to close on the Qs. Turned around and made new highs, just like the DIA and the S&P. And now we've been going sideways for about an hour and a half, 2 hours. And we need a little bit of an upside breakout to perpetuate the strength for today, Friday. The Russell 2000 is extremely similar. It dropped off significantly more than needed to close the opening gap, which actually was there only for like 5 minutes. It gapped up and then immediately came down within a few minutes and closed its gap, sank a little bit more. Now it also has rallied to new highs and started to go sideways. That's where we are. My opinion about the rest of the day is a little fuzzy. I don't mind if it stays here. I don't mind if it dips a little bit. Remember, we're up 475 already. And it's only been 2 hours and a fraction. But I do think a little more likely is a little bit more strength, and we're close to the highs already right now. So I'm looking for another 2, maybe 4 more points at the most today. On Tuesday, there might be a little bit more follow through, and then I think it's going to start to come down after Tuesday. Let's look at some other charts and some other markets. The October lows I do want to touch on before we leave the stock market indexes and go to commodities and cycles and the like. This is the October low chart. It has October low, the month of October, in a green bar. This year hasn't happened yet, obviously. It's September 2nd. But September is typically a very down month, very strong, very weak, I should say, down month. And we did top out in August, which is simply not unheard of at all, the middle of August, and drop about 40 points already, and bounced today and yesterday. So I'm looking for lower levels, and frankly, I'm looking for a test of 360 somewhere in August, some time frame in August. So during the month of September, I expect to see a significant amount of more weakness. That would be 30 more points from where we are right now, 40 more points lower, and I think we're going to go up a little bit further first, and then come down, I don't know what, 42, 44 points, 45 points, down to approximately 360 sometime in October. Last year, bottomed out in October. Year before, a little tiny bit late. Then you had the COVID crash between, the 2 Octobers. The previous year, that would be 2019. It was slightly early, but still happened. It happened not as profoundly in 2018. 17, there was no significant low, but if you bought during that month, you would have made money. During 2016, damn good buying opportunity. Slightly early in 2015, 2014 was a whopper, 2013 was a whopper, 2012 was a little late. You can see what I'm talking about here. October represents the time frame when we typically have a low for a great buying opportunity. Don't ask me why. Some people say it's an election cycle. Some people give other reasons. Do I really give two toots or a damn? No, I don't. All I want to get is buy signals during October, right? Okay. Bonds. It corroborates what I've just been talking about. Not only this rally for the next day or two, but also maybe something a little bit better. Right now, we are oversold yesterday and today. I do not have an official buy signal. I just have the expectation that the market is going to rally a little bit for a short period of time in the bond futures. When it goes up, rates go down. That's nice. It helps the market go up a little. But the trend is not changing. The trend is obviously down substantially. And I'm so glad to tell you that we got a official sell signal on August 2nd. There's my red Ehrlich reversal signal. And at the bottom of the damn market for months and months, either way, we got a bullish engulfing. And the other corroborating information that's needed to turn the daily bar green. Next, we got another buy signal. Didn't work quite as well, lasted only a week or so, but there was money to be made. That one just didn't work at all, so I'm not highlighting it with an arrow. That one didn't work either, but the losses are small. Remember, I don't risk very much at all on these automated trading strategies. The ER signal, or Ehrlich reversal, ER reversal, is a 100% automated trading strategy, 100% automated. Getting in, getting out, everything. We got a bear signal on the top of the market there, looking good. So rates are gonna, I think, hope, go up a little for a few days. Not a lot, not for very long, helping the short-term rally in the S&P. What about crude oil on everybody's mind? Well, it could make a new low and actually could have a really good downside breakout. Let me think, hey, here we are in front of a 3-day weekend. Why was it going down when everybody's going to start driving? That's interesting. Normally you'd think it'd be going up. So supply, I totally agree. Fundamentals drive a long-term trend. There's no doubt in my mind. But you're not going to be able to pick the top and the bottom of the market with the fundamentals. With the ER signals, you do and you can often. We have the top of the petroleum market and a broad double top formation, the second high, smack dab on June 14th. Gotta love it. Looks like we could have a downside breakout after today, when the 3-day weekend is over and the demand for gasoline drops all of a sudden, because now it's back to work again and you're not taking a 3-day weekend off to a bed and breakfast someplace, which frankly I'm going to do. Anyway, this looks bearish to me. This looks like it's about to break out to the downside. It is not oversold. It is not showing that much of an indication of a bounce, maybe a little, but I do think it's going to close below 85 and a quarter. And if that happens, I think these two lows back in March and in April are in jeopardy. And if we close below those two lows on this continuation contract on crude oil, it could drop a lot more. That is a very significant major top formation. I hope it works. I want to get the gas prices down as low as we can. Oh, hey, we got a buy signal on the bottom of that break way back in August of 21. And that's what this trading system is built for. And we got a sell signal smack on top of the market in July of 21. Two great signals, one on the top and one on the bottom. And of course the one that was more recent. I think I'm going to leave you there, except for euro dollars. Love to go to Europe when I get the chance. Our latest buy signal did not work. We got stopped out when it made a low lower than the green bar low, which was Wednesday. So we're not bullish now at the moment on the euro dollar. I like to be bearish on euros because that means the US dollar is getting stronger and stronger. Right now they're at a 1-to-1 par. They equal each other. So if you buy something for 20 bucks in the United States and you go to France and buy the exact same product, theoretically it's going to cost the exact same amount. Haha, theoretically. That's it. I've covered a lot of ground today. Thank you very much. Stan Ehrlich, have a great 3-day weekend.